Good morning, everyone, and welcome to today's session of Pre-Bill with William O'Neill India, dated Feb 21, 2024. Before we go ahead, I would like to give a small disclaimer that registration granted by SEBI, membership, Basel, and certification of NISM is no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment security markets are subject to market risk. Read all the related documents carefully before investing. So we talk about Nifty chart analysis. We know in day before yesterday's session, Nifty reclaimed its recent high of 22,126 on an intraday basis, and hence we are back to a confirmed uptrend. Even yesterday, Nifty made a new high. So in the last few days, post the reclaim of the 21 DMA and the bounce back from the 50 DMA, you can see there has been good accumulation happening for Nifty, and we are in a confirmed uptrend as we have reclaimed the previous high. So just to clarify to the new users, when the previous high gets reclaimed, the distribution day count does not get reset, and currently the distribution day count is at 4. So for new users, distribution day count is a metric used by William O'Neill to gauge market weakness. So distribution day count is nothing but when markets fall by 0.2% on volumes higher than the previous day, we record it as a distribution day. So at this moment, it was not a direct process where when we went from confirmed uptrend to rally attempt, then a follow through day, then to a confirmed uptrend. So that is why uh, the distribution day count still remained there. So distribution day count continues to remain at 4 going forward, but one distribution day count is expected to expire in the near future. Uh, and if going forward, if key moving averages such as your 21 DMA and the 50 DMA gets breached and distribution day gets added, markets will go to uptrend under pressure. However, if these averages gets held up and no distribution day gets added or distribution day continues to remain under control, then we continue to remain in a confirmed uptrend. At this moment, even holding off the 10 EMA looks a good sign, and even the recent highs will act as such as the 22, 124, and 126 will act as good support for Nifty. Talking about key news, Swan Energy has approved the launch of qualified institutional placement QIP on February 20. The floor price has been fixed at rupees 703.29 per share. ABB reported its December quarter earnings, and it did beat the estimates. PAT grew by 13% YY to 345 crores. Revenue grew 14% YY to 2757 crores. Union Bank has approved raising up to rupees 3,000 crores through a QIP raise. The QIP issue opened on February 20 with a floor price of rupees 142.78 per equity share. Wipro and Intel Foundry collaborate to advance chip design and development. Yesterday, FI were net sellers of Indian equities worth rupees 1,335 crores and DI were net buyers of equity worth rupees 1,491 crores. Talking about global market, yesterday all the three US indices closed lower. As you can see, Dow Jones closed lower by 0.2%, S&P 500 by 0.6%, and Nasdaq by 0.9%. Barring on the Asian market front, barring Shanghai, the other two indices are trading lower as well. Nikkei is trading lower by 0.5%, Kospi by 0.4%. Shanghai, on the other hand, is trading higher by 1.4%. Talking about Gift Nifty is indicating a positive opening at this moment, but a muted positive opening. Yesterday's close was around 22,196 levels and indicating around 45-50 point gap up opening can be even muted as well. with a slightly positive bias. Uh, so talking about the chart of the day, the chart of the day for us is KEI Industries. The stock is forming consolidation base at this moment, but don't ratings and everything is good. But only thing is that no major signs of accumulation on the right hand side of the base is happening at this moment. So that's a disclaimer that going forward we need to see good volume bars happening in terms of when price moves higher. So, but the stock is still 4% to pivot. So, in the next few days, if the stock is able to exhibit good accumulation, then I mean that box gets ticked off. EPS strength remains good at 87. Price strength of 62 is fair, but the RS line has started to move higher. Once it's moved higher even more, then it can be even a better sign. Buyer demand of A minus is still good, and fund holding for the stock have been improving. ROE at 18% for the stock continues to remain very well. And even on the results front, even the latest quarter result was a good one. And the last 4 to 5 quarter results have been very good for the stock. If the stock breaks out and trades in the ideal buy range, and if the market remains supportive as well, this stock can be a good stock to watch out for. Uh, so overall, if markets remain supportive and the stock shows signs of accumulation and then it breaks out on above average volume, if all the box gets ticked off, can keep this stock in your ideal buy watch list as well. So, thank you, and that's it from my side. And stay tuned to the space of Prebell with William O'Neill India from Monday to Friday at 8:45 a.m. sharp.